Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow, like every other day. I'm going to inject my financial opinions in there. And if you need any help with anything, check out finding-value.com. That's where we go over individual companies. You can see what I'm buying, what I'm doing with the commodity companies. They're mainly commodity companies. We do cover other stuff too. There can be technology companies and emerging markets and stuff like that that we can look at. Or you can bring up different sectors if you want, and you want me to chart them for you guys. I can do that during question and answer sessions. So let's dive in here. Let's see what's going on today, and I can give you my opinions. Looks like the dollar is weakening still. And again, this is a measurement or a measuring stick of the dollar versus other currencies. It's a relative strength indicator. And we are pulling on back, and that does look like we could continue lower in the DXY. And what impact does that have to investments? What does it tell you? Generally, what occurs is it puts a tailwind behind certain investments like emerging markets, commodities, things that are priced in dollars. And money can flow a little bit different under a declining interest rate, declining dollar or DXY environment versus an increasing DXY and increasing interest rate environment. So those are some things that are different when that occurs. The 2-year today is up, surprisingly. It is holding on in the short term. And we can look at this, and this, a big deal here is if this starts to jet lower, it means that insiders in the banking community know that the Federal Reserve is going to lower the Fed funds rate and that there's most likely a problem in the market. And that's why you really want to watch the 2-year. It can tell you that there could be a potential problem in the market. And all those recessionary, the people calling for a recession, they're going to be right if that 2-year drops hard. Now, if the 2-year goes sideways, like we mainly go sideways and we're higher for longer, that may stay up there for a while. The higher for longer could be for multiple years. And what occurs would be a different outcome. So we could come up here and we just go sideways for a while versus a beeline lower. A beeline lower generally means that people are running into bonds for safety and that there is a potential problem in the market. If we stay higher for longer, that would mean that uranium, oil, and all that stuff's probably going to go up for the next however many years, and that the real estate market, they're trying to tamper down inflation from the real estate market, but they could still be getting inflation from the deficit spending and interest payments and all that stuff from the government. This is a really tricky call because the interest rates moving in certain directions and how much they move is going to impact the value and the rotation of money in the system. And right now we're in the thick of a housing market boom in terms of an expansion phase, which has been drastically slowed down by interest rates. And I am of the opinion that if interest rates go down, that boom will continue and credit will continue to expand. So it's interesting. And we could have a short-term pullback in this in a longer-term secular bull market in yields going higher. So you could have a short-term cyclical pullback like this and then have it go back up again. So that's kind of like your first wave, your second wave, and then a big third wave comes in interest rates. And interest rates are just lagging the inflation in the system. It's the credit creation in the banking system against either the loans being created against new homes being built or the deficits that the government is spending that can also create inflation and pressure on interest rates to go on up. The short term, I think, is the hardest call. And I'm waiting to see if we get a trend out of this or not. So again, the break of this pattern's to the downside, but we're holding up at the moment. The 10-year slightly lower, down basically flat, just slightly lower today. And again, this is a big deal because as this goes down, it impacts mortgage rates and all these other things. And right now, it looks like we could continue lower. The momentum's to the downside. Now, The other question I would ask is, well, how sustaining is this move? Are we just going to come back here and then rip it back to the upside? That's my guess of what could potentially occur. A weakness in yields or a bounce in bond prices, which gets everybody off sides, and then it rips to the other direction. The 30 years in the same spot, we've got a definite bearish pattern formation. It's a bearish engulfing here. We were slightly lower today, but is this trend line going to hold the support level there? Or are we going to come back to a much lower level before heading higher? If we come back to a much lower level, that means that most likely there was a slowdown in the market, a recession, a pullback, something like that, and people ran into bonds. Or is this just going to fall kind of back like this, and then we rip it to the upside again? And again, the short term, I think it's really hard to get that, nail that right in the short term. We are in the thick of the demographic running larger deficits in homes, and the interest rates, I think, are at an unaffordable level, which has definitely slowed down loaning volume and sales volume of homes. Lots of things to chew on there in terms of competing inflationary forces and disinflationary forces all occurring at the same time. TYX TNX ratio is still inverting to some degree, which means the long end of the curve, the 10-year, went down more than the 10-year went down less than the 30-year, and it's still inverted. Still inverted. Bond price is up a little bit. Again, are we just going to come back to this level here and turn on over, or are we going to come back to a much larger move to the upside and retest this breakout of the trend line? Again, I don't know. We'll have to wait and see. I'm still in the camp that given where oil's positioned and all that stuff, we could easily see yields drop or stay low. So bond prices, I should say, bond prices could stay low and yields could remain elevated. That's what I meant to say. And then the 2-year, 10-year, it's still continuing to go up today, which means it's going in the opposite direction that everyone thought it would go if we were going to have a recession. It's going in the wrong direction. It's inverting further. We've got gold price basically moving sideways. It is I call it a bloody nose, which is generally a continuation pattern to the upside. Still looks good for a higher move. It's still looking good. Silver down a little bit, but again, it's just a small little selling pressure day, and I still think we could go higher. And if we get above $25 an ounce and we can stay up there for a monthly closing, that's going to be very good for much higher silver prices. So everything's still intact, and the momentum is still intact for upside momentum. Now we just have to see if we can break through some critical levels that are still above us. Platinum up a little bit. Surprising, we're right on resistance. I think it looks good to continue higher, but we may go down a little bit before continuing on that path. The reason I say that is the opening and closing prices are contracting into this, where we could roll over before heading on up. We've got palladium also going higher. This actually looks pretty good to continue on up. Good momentum. We're coming right through cutting through some resistance here. If we were to extend that out, that's that lower trend line. And I think this is a false breakout where we could go into a slingshot cheetah to the upside. And I think all of these could slingshot to the upside. Silver, platinum, palladium, and maybe even gold. If that occurs, then the market conditions, I think, are going to be lowering interest rates, recessionary fears, that type of stuff, where we could get a big move to the upside. But that's not in the bag yet. Oil's still sitting on top of its pattern, and maybe oil starts to rip, and we get a lagged effect behind it, where interest rates remain higher for longer, so to speak. XE to gold ratio, the gold and silver mining companies down a little bit today. That is a bearish engulfing. We could go sideways to slightly lower over the short term. And we haven't broken any of these big major downtrend lines or even resistance lines going up now. We got to break through all that. A lot of work ahead of us for the gold and silver mining companies. But I still like some of the companies very much. The CRB index, definitely higher today, up 0.85%. Oil was up quite a bit today. Where is this going to go? What's it look like in the longer term? All very good questions. And I'm going to remove this, and we're just going to leave it open at this time. And we'll see where this thing goes. And we could easily put different, there's a trend line that's developing here, it looks like. And there could be a trend line going there. But let's get more data. Let's see what this thing looks like over time. But overall, I think we're still going to go higher over the longer term, bigger picture view. But, could we get a pullback like this? We could. Definitely possible. If we get a slowdown in the market, we could see the CRB index fall for a period of time. Short term wise, a lot of conflicting data, a lot of conflicting stuff going on in the short term. The CRB to S&P 500 up a little bit today, so outperforming. We've had a pretty big pullback here, and let's back out. We're still coming on this downtrend, and maybe we come all the way back and do kind of like a big retest, or come back and do kind of a double bottom. Double bottom would be somewhere in this range here. We have a little bit lower to go to hit that double bottom if we were to do that. GDX, so GDX right underneath resistance, still just down a little bit today. We've got GDXJ down a little bit underneath resistance. I didn't draw the horizontal line on this one. And then SILJ also, I've got the horizontal resistance line that we're still below, and basically we're flat today for SILJ. Still looks okay though. Crude oil up almost 4%. To me, this looks like it's trying to put in a bottom. Generally, you get some increased like washout selling pressure, and you get a nice big buying pressure day. More than likely, we're going to go sideways for a little bit, and then I think we'll eventually work our way on up. I like how the equities are performing in the energy sector, so those look good too. And we'll go over that here shortly. So it looks like it's trying to bottom, but it's still early. Momentum is still down, and we're going to have to work that momentum off, probably in a sideways fashion or something like that. And sometimes these can just rip out of the bottom depending on what happens in this world. I mean, there is war going on, and something could easily move this in the upside direction very quickly. TTF gas down a little bit, still above long-term support, and then we've got natural gas right on support of where we are. I know we've got pretty warm weather where I'm at, and that's definitely not a positive thing for natural gas prices. I mean, we are exceptionally warm here for November. XOP, yeah, you know me, hitting up 2.2%, and we are still squeezing in this corner here. And I think it's still developing positively. This is an inverted head and shoulders. We are creating the right-hand shoulder, and we're at a pretty good spot here where we can get support underneath us, and in a squeezing type pattern too on that side. So I like it if you're a long-term holder. I like it a lot because if we can break to the upside here, guys, see you, wouldn't want to be you. It's going to be gone. And we've got some pretty big price projection moves for a lot of the companies that have these inverted head and shoulders. OIH up 2.23%. The energy service company is getting some support right on that bottom support line. And we're still within the pattern. Bigger, longer term view though, guys, this is just one big flag pattern. That's all it is. You get big impulse surge higher, and then you get the small selling pressure, and then eventually I think it's going to rip. You can notice all the big green candlesticks in here and the smaller red selling pressure candlesticks. That is that stair-stepping pattern that I'm used to seeing. Stair step up until you get a launch. So usually you get kind of like a pattern that kind of like stair steps up, and then sometimes you get the big move, and sometimes that also stair steps up with basically flag patterns that are moving. And we're doing that on a small scale in what I consider to be kind of like that lead-in move. A lot of the times a chart will come up like this, and then all of a sudden it kind of like just rips, and it rips out of that channel or that Livermore accumulation cylinder. It's kind of basically how I envision this. This is kind of an accumulation process of smart money accumulating. Sometimes it forms it in a channel. Sometimes it forms it in an accumulation cylinder or whatnot. This is your false breakdown. This is going to occur in palladium and all these other ones that had false breakdowns. And there's other companies too that are forming these big, huge falling wedges with false breakdowns. And I talk about those companies on the website. And we'll talk about it this weekend at the 5 p.m. session on Sunday, the question and answer session. Sprout Physical Uranium Trust continuing to move higher. This is a breakout here to the upside. Again, guys, this looks really strong, and I think it will continue higher. We're starting to release from a lot of the resistance levels. There's big resistance here. You can see all the resistance here, and we just cut through it like a hot knife through butter. We still have a little bit of resistance through here that we are still going to go through. I can see the green line of where it's going across. It's right here, the price, current price. And we got to get through these other resistance levels that are still above us. But as we slice through this stuff, the resistance becomes less and less. And the price will just continue to release higher. URA, some positive developments here, guys. Remember I talked about this resistance line. Look what happened today. Now, does that mean that we just rip to the upside? Potentially. We could also do a retest here or sit and rest on top of it before moving higher. So I don't think we're going to go too much lower, and I think upside potential is there by breaking that resistance level. So now let's just stay up there, close, and get moving. We could see a breakout. URNM is also following that, and same with URNJ. Now, as we go through this bull market, you can also draw it like this too. As we go through this bull market, the propensity of some of these smaller companies may start to kick up, like where people are the retail sector is going to take notice. They're going to start piling money into some of the smaller companies, and we could see URNJ really take off. Now, that's not saying that you guys should just go out and buy it. Do your due diligence, figure out how you want to approach it. But URNM and URNJ, these guys, we could see some big moves out of it as we break out of these resistance lines to the upside. TAN also moving on up a little bit. It's looking like it's trying to put in a bottom here. We could see some sideways basing action occur here right at support. And that's probably what's going to happen here. We've got COPX up 1.3%. We're right at resistance. You can see that we've been sitting at support and or resistance. It's kind of sitting on it. And a lot of the charts, if you were to look at and pull up a lot of the diversified mining charts, they're squeezing up. And if we break to the upside, a lot of those, I think this is just going to launch. We are right at what's considered to be an ideal buy point in these locations here in terms of kind of classical technical analysis and basing patterns and breaking the base and doing retests. Lithium also moving on up, looking quite good today, 2.36%. And I do think this is going to break. So if you're an early buyer and you're aggressive, maybe lithium's one to look at as we're breaking a downtrend line right now. Same with rare earth metals. It's also breaking to the upside, and we just got a retest yesterday, so that looks good to potentially move higher. This would be an early entry point. A good spot to be looking if you're a believer in rare earth metals. SPX moving on up slightly, just 0.13% out of this flag pattern. I think it will continue higher. Same with NASDAQ. We've broken this to the upside, and I think we could continue higher in the short term, maybe even as high as the all-time highs back in 2021. KRE up 1.53%, continues to move on up. We've broken the downtrend line. The weekly view looks really strong. That's a bullish engulfing to continue higher. We could see a big move to the upside if rates continue to go down and the housing market continues to strengthen. I think money flows could come into home builders and regional banking and all that if we have a big housing market boom. Emerging markets continuing to move on up. We're at resistance, trying to break through this resistance area, and I think we will release if the dollar continues to go lower. I think we'll see a big move to the upside in emerging markets. XHB also strengthening, up 1%. This looks very good to continue higher in the home builders ETF. And if we start to play with the 84 plus level, 85 for sure, it's going to clear it. We're going to be talking about potential new all-time highs. This here is a cup and potential handle that we've broken to the upside on the home builders ETF, cup and handle continuation pattern. The projected move, let's go logarithmic real quick. Projected move for that, if it were to break, which we've broken, is up around 121, but then that also is going to be a break of a larger channel pattern, which will break that as well if we get up to 120, and it will probably run much, much higher than that. So that looks real interesting and pretty confidence inspiring if you are part of the housing market thesis and the loans against homes, because this supports exactly what I think is potentially coming. Moo also moving higher, looks good. Looks like it's trying to base out here. Probably good potential investments in Moo. This is a breakout here and a retest. This is an ideal buy point right where we're at today. And I do have investment ideas around this, fertilizer companies, etc., that I share with all the members. Copper moving on up. This is inspiring. We've got another bullish engulfing here. Could we rip higher in copper? It kind of looks like we could. We're underneath resistance at about $3.80. We're right underneath it, and I think we could get a break here. When that breaks, I don't think it's going to go slow. I think it could potentially go fast. It could be a big move, but we haven't broken it yet. And the diversified mining companies all exhibit this same pattern. Iron ore is already broken to the upside. That's why I go over iron ore. And I find it hard to believe that iron ore broke to the upside and copper's not going to follow. That's my opinion there. Iron ore, here's iron ore continuing to move up. This is another accumulation cylinder with a falling wedge and a break of that falling wedge. Projected move is up around 216, but that also then kicks you out of this pattern here where you're breaking that resistance, where we could see even a further run. So interesting times here, and I think this will continue higher for iron ore. That doesn't mean it happens overnight. It doesn't mean I'm saying it's going to just go like this straight up. We're going to see this thing stair step higher, get consolidation patterns, and just continue to work its way on up. And again, I've got a lot of ideas around iron ore companies and steel and all those. Aluminum, still in this resistance support zone. We are squeezing up. We've got support right there. The aluminum companies starting to move a little bit higher. I suspect that aluminum is going to move up with the other base metals moving up. Iron ore is moving up. I think copper breaks to the upside. I think a lot of these diversified mining companies, aluminum and other commodities that are base metals will probably follow suit. Baltic Dry Index moving up 4.5%. We're right at that resistance level again, and hopefully we can break. And move on up. A lot of our dry bulk companies are going to look really good, and we're sitting in them getting paid big dividend yields. Newcastle coal moving sideways, down 0.4%. But again, I think this looks like a really good opportunity for coal and a lot of the coal companies. I think we're down as natural gas kind of consolidates. We could be down for 6 months to a year even. It's possible. And then maybe we're waiting for cold weather. Maybe we're waiting for that same squeeze. But I think given where we're at, we're right sitting on top of support, and that's generally a good spot. Our breakout levels here, this is your back test. And then the basing patterns back here, this is your big base that you basically jumped from. That looks really good for Newcastle coal. Bitcoin up slightly today, up about 0.5%, just kind of working its way on up. And then we've got Ethereum that's down, and we're right at support, right at long-term support here. And I think this is probably going to break to the upside for Ethereum. Bitcoin and Ethereum also supporting credit expansion and or deficit spending or wherever that inflation is coming from. So further evidence that commodity bull market's most likely coming, even using Bitcoin and Ethereum. But that's what I've got for today. Give me a thumb up, subscribe to the channel, subscribe to the website. Love to have you part of the community. We have a 5 p.m. Mountain Standard Time question and answer session coming on Sunday. Ask your questions. We're going to, if someone's contemplating something, I'll probably answer it there about some uranium stocks and what to do and all that. And we can talk about it. Obviously, I can't give advice, but I can tell you maybe what I would do in that situation or how I would handle it or how I'm positioning myself so you guys can make your own decision on that. So, yeah, everything looks really good. Uranium looks super solid. We're breaking out of, that resistance line to the upside. Oil, it's probably going to take a little bit of time here, but I think it's going to try to put in a bottom while looking at the equities and how the equities are positioned. Makes me think that we could try to put in a bottom, around this level. Um, Gold and silver still look good. We just got to break some key resistance, overhead resistance. If we can break that, we're going to go way higher, guys. If we can break those key resistance lines, downtrend lines. But most everything, it looks like we're doing back tests, retests on some things. Iron ore looks really good. Copper looks like we could break some overhead resistance. We're there. It's just going to take some time, some patience. So that's what we got. And if you guys want to join the community, discounts, the coupon code. You're going to see some heavier discounts come for Black Friday. So the discounts will be like the Halloween discounts. So look for those. I'll put them on here shortly. This next week, you'll see them come up in the later back half of November, and you can join our community for a little bit less to try it out, or you can join the yearly price, which I'll give a bigger discount, much like the Halloween discount. You can join for a year and sign up then. So that's what I've got for today, guys. We'll catch you later. This is Finding Value.